I think the first decade you saw these drawdowns of 80, 85%. And I think in the last 2 years, we've seen drawdowns that are like maxed out at 50% or so. Might have been a 55 or 53% or something. But the volatility is less. I think that the asset class is maturing. I guess, there are a lot of reasons why the asset class is volatile. The lack of wash trading rules, the extreme leverage, the cross collateralization, the security tokens, the 24/7, 365, the uncertainty, the accounting treatment, right? I could give you a litany of why it's volatile. I could tell you why it's getting less volatile, and that's as more institutional investors come in, and as their time horizon gets longer, it'll get less volatile, and it will get less volatile as more regulation comes. And ironically, a lot of things that people think are bad will actually be good for the asset class. Like if the House decides that they're going to implement the wash trading rule, and that means you're not allowed to sell something and buy it back the next hour, if that happens, a lot of fast money trading will be discouraged. That would decrease the volatility. Do I think we're in a crypto winter? No. I don't think we're in a crypto winter. I think we're fighting through a lot of macro issues, right? Like people are uncertain about the degree and extent of regulatory intervention and what'll happen. They're uncertain about geopolitics, be it either, Russia, China policy on crypto versus, Ukraine and the like. They're uncertain about monetary policy. Like they're like, oh, there's no inflation, so Bitcoin trades down. Oh my, there's massive inflation and the Fed's going to raise interest, so Bitcoin trades down. And so I think we're working through that. In the near term, you get beat up a little bit, but there are countervailing forces, and the forces that are taking the volatility away are regulatory clarity. It'll be a good thing, and every single one of these things that gets fixed will decrease. It'll decrease volatility, and it'll increase the value of the entire ecosystem. The second thing is all of these public companies, like public Bitcoin miners, as they come public and they raise capital, they're stabilizing the entire asset class. Anytime a Bitcoin miner raises money, there's only one thing that's happening there, which is that means that money's being spent either on mining equipment or it's being spent on Bitcoin. But ultimately, it's really being spent on Bitcoin, because if they have the capital, that's that much less Bitcoin they're selling. Once half of the hash power of the network is public, I don't know if you noticed, the Bitcoin Mining Council is like 46% of the hash power of the network now. And most of them are, not all of them, but a lot of them are public. As those companies come public and they buy up the private miners, and they issue equity and they issue debt, then the amount of Bitcoin they sell decreases, and the stock to flow increases, and the stock to flow eventually goes to infinity. And that means the available supply, each day goes to a trickle, and that creates price pressure. So those dynamics are going to decrease volatility. If banks are able to hold Bitcoin on their balance sheet, like the big banks, they get comfortable, and FDIC guidance would be a critical catalyst there, then you're going to see a big demand. And then if you see companies like Silvergate Bank issued credit lines, if you have FDIC insured banks, they get a green light to do stable coins, a green light to get into crypto lending, then people that own Bitcoin don't have to sell the Bitcoin. If they don't sell the Bitcoin, instead of holding it for 4 years, they hold it for 8 years. If they hold it for 8 years, it's the same as the stock to flow doubling. But if you have licensed companies in the US that are able to raise hundreds of millions or billions of dollars of capital to give you yield on your crypto, then you're going to have a lot more people think, I should hold it, not sell it. Maybe I'll buy it, not sell it. And so the key to an asset class maturing is you either need to be able to rent it, like you need to rent your building, or you need to be able to mortgage it. And if you can put a mortgage on a house, you'll buy a house. And if you can rent that warehouse, maybe you'll buy that warehouse and rent it out as an investment property. And so as the entire industry matures, and as people can mortgage things and they can generate yield on things, and as the Bitcoin miners get public and have access to lots of cheap capital, then I think what you see is volatility decreases, the price increases, right? It's a positive feedback loop. right? You know, self-fulfilling prophecy in a way.